In the last 10 years, the gold to silver ratio has made a hard divergent. Are those low gold to silver ratios possible anymore? Will it happen again? We will explore those questions and more coming up. Hey everyone, welcome to Campbell's Coins. I'm asked at least on a weekly basis about the gold to silver ratio. I've covered this in past videos, but that was years ago. So I thought we'd do an update video and cover it to see if we will ever see a low gold to silver ratio again. What you see before you is 1 ounce gold and 15 ounces of silver, roughly the ratio these metals exist in the Earth's crust, but more on that in a little bit. So I've covered this topic pretty extensively, but that was way more than 3 years ago. In my first video, I covered what the gold to silver ratio is. In my second video, I talked about how you can use the gold to silver ratio to benefit you. What is the gold to silver ratio? Well, there are two different answers when covering this topic, but they are each related. The gold to silver price ratio is the one that most people are talking about. This is the one you see when you open your JM Bullion app. Shout out to JM Bullion for not sponsoring this video. The gold to silver price ratio is the value of these metals in relation to one another's spot price. This ratio fluctuates all the time depending upon market conditions, and I will discuss historic ratios in a second. I'm willing to bet a lot of silver stackers got into silver because they wanted to benefit from a falling gold to silver price ratio. If you're buying silver at 83 to 1 and it drops to 30 to 1, that means you can technically trade your silver for more gold. The lower the ratio gets, you're using less silver to do it. The issue a lot of stackers don't realize is this gold to silver ratio is based on spot price. How many of you are buying silver eagles for spot? Last I saw, they're going for about $40. Take spot gold and divide it by your average silver price, and that is your true gold to silver ratio for your stack. If you're buying $40 silver eagles, or if your average price is $40, based on spot gold, your gold to silver ratio is 50 to 1. So you really need gold to fall or silver to shoot up in price to make it beneficial for you to trade those silver eagles for gold, especially when it's currently at 83 to 1. My silver stack average is around $18. $1,957 divided by 18 gives us 108 to 1. The higher the gold to silver ratio is for you, the more you're able to get your silver to work for you to get gold. The second gold to silver ratio is one not really discussed, and that is the ratio of gold to silver as they exist in nature, in the Earth's crust. Some say that the natural occurrence of gold to silver in the Earth's crust is around 8 to 1. Some say it's 15 to 1. Regardless of which, silver's value isn't reflected accurately. We are currently seeing a gold to silver price ratio in the 70s and 80s, which has greatly exceeded silver's rarity in relation to gold. So either silver is undervalued or gold is overvalued. My vote is on the former, especially when you look at silver's demand in the last decade. Okay, so what is something people desperately need? If you say drugs, the answer is no. The real answer is perspective. If the gold to silver ratio is currently at 83 to 1, what has it been historically? In Roman times, the gold to silver price ratio was 12 to 1. At the birth of the US, the price ratio was around 15 to 1. Both of these price ratios accurately reflect the natural occurrence of gold to silver in nature. In 1919, the price ratio was 17 to 1. In 1967, it was 15.6 to 1. And in 1979, it was 15 to 1. I mention this to show you that even within the last century, the gold to silver ratio has been in the teens. The highest gold to silver ratio hit 124 to 1 in March and April of 2020. But this was a fleeting moment and it crashed back down into the 90s. Those are some extremes. What is the average price ratio? Over the last century, the average price ratio is around 48 to 1. If you get anything out of this video, it is that the gold to silver price ratio is currently way above average. It is abnormal, especially when you consider the industrial usage for silver over the last decade. Within the last 5 years, I would say the average has been more in the 80s, and we have seen more extremes for longer periods than ever before. Does this mean the gold to silver ratio is now irrelevant? Will this gap ever close? No one knows for sure. I believe we are living in an extreme gold to silver ratio period, and this gap will eventually get smaller, especially in the decades to come when silver production starts to drop. This isn't to say that silver is a bad buy. It's all about timing the market. When the gold to silver ratio drops, the dips have been fairly brief. This is because silver's price shoots up really fast and falls really fast. So you should time this correctly. And I don't mean trading or selling once silver hits a new all-time high. By that time, the market will be flooded with silver from people selling their positions. You want to sell or trade as the price of silver is climbing to its peak, not while it's peaked or after it's peaked. By that time, it might be too late. If your end goal is gold, why wait for a maybe? If your end goal is a silver stack, then this conversation is completely irrelevant to you. Because of this brief window and the uncertainty of available gold, just get gold now while you can. You could wait for this moment to happen and hope that the market conditions are perfect for you to pull that off, or you can just get gold now. Silver's potential for growth is exponentially greater than gold. This ratio is bound to fall, and when it does, silver's value will rise and close in on gold. Just 11 years ago, when the price of gold and silver really took off, this ratio is down to 31 to 1. Getting to a lower gold to silver ratio isn't that far-fetched, considering we just saw it a decade ago. If the last time you saw a low gold to silver ratio was in the 1970s, then I would agree with the noise out there and say the gold to silver ratio is dead and not to bother with it. A decade is not that far back. If anyone is arguing that that's too much time, we waited a decade for gold to hit its previous all-time high once again. It would be like some Zoomer saying, gold will never hit all-time highs again because it's been a decade. It's a ludicrous statement and very illogical. Personally, I would look for the gold to silver ratio to hit the 40s before offloading some of my stack. My silver stack is an extremely long-term investment hold. If a briefly beneficial period pops up before then, I might offload some, but the majority of my silver stack is with me for the long haul. Before I let you go, I wanted to give you a quick update on one of my sponsors for this channel. This is not a sponsored video, just something I wanted to quickly mention. A week or so ago, I covered the junior mining company US Gold Mining Incorporated, USGO, on NASDAQ. USGO is very close to being added to the Russell Index if it trades a little bit higher. If it makes it onto the Russell, it will bring a ton of buying in the months to come. Every 401k who owns the Russell Index will own USGO. This is a big deal because they just IPO'd a few weeks ago, and if it's added, it could mean a lot of growth. If you've been thinking of jumping on this, or if you wanted to add more to your position, now might be the time. I'm not giving any investment advice, just something to look into if it interests you. And please do your own due diligence before making any investments and talk to your investment and tax advisors. Your time is your most precious asset, and I appreciate you spending it here with me. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.